So Andy, why should you buy Bitcoin?
Yeah, that's makes me think, do I give the long answer or the short answer? I feel
Whatever comes
like,
to mind.
the short answer is there's too much debt. And in a world of too much debt, they got to print more money. And in a world where they're going to print more money, you want to own the hardest money that's available to you. And that used to be gold, but today it's Bitcoin. So that's the short story. And then obviously the longer story is, oh, how did we get here? How is it that in a fiat money system, which we've lived with for 50 plus years, how did the debt accumulate? How did we run giant deficits that accumulated over time and got bigger and bigger? And meanwhile, in a debt-based economy where interest rates get held too low, how does debt accumulate at the personal level and the corporate level and the government level? And then, shouldn't all this make you want to buy gold? And yeah, it probably should. By the way, unpopular opinion for a Bitcoin podcast is pretty bullish on gold. But for every dollar that accrues to gold, that's just another dollar for Bitcoin to eat in the future, in my humble opinion. So I found a way to score the characteristics of gold and Bitcoin and the dollar in terms of being monetary assets. And surprise, surprise, I found that Bitcoin already outscored the dollar when we published 5.5 years ago. And frankly, with the way the world's gone since then, the thesis has continued to play out, and maybe even faster than I anticipated.
And so the book was released 2019.
Yes, sir.
Yeah, cool.
September 2nd, 2019.
Awesome. What an amazing time to have done it in some senses. What resonated mostly for me was that I was like heavily researching Bitcoin. We touched on this just a little before we started the call, but in my mid-20s, I inherited money after my father had died, and I was experienced in dealing with people like yourself, i.e. financial advisors. So if you've got a family that has money, what do you do with it? And in the book, you started talking about things like Sharpe ratios and how risk-adjusted rate is so amazing. Like any portfolio essentially is going to start looking pretty good. And I was like, that's the kind of language I recognize. Now, I'm not a fund manager myself, and I've never been a financial advisor myself, but it's important if you have money, you need to make the decision what to do with it. And I'm very different now than I was 10 years ago. But I didn't know of many Bitcoin-focused materials back then that had that kind of lens. A lot's changed in 5.5 years, because I think it's fair to say that the rest of the financial industry is catching up really, really fast. Were you like the only person talking about that kind of thing back then?
Well, I will say that I was the only wealth manager to have published a book on Bitcoin. And I think that's actually still true today. Although I think Morgan Richard is going to put one out before too long. And I'm sure that one will be great because she's really smart on Bitcoin and really smart on wealth management. But yes, it was lonely. It was lonely out there at the time. It was, as you might expect, a fight with my business partners to get Bitcoin included in clients' portfolios because, yes, wealth managers who were bullish on Bitcoin and were willing to go out on a limb, so to speak, and add Bitcoin to their clients' portfolios were at least few and far between. I'm not going to say non-existent because they did exist, but they were rare. Quite rare as hen's teeth, as they say.
Well, and that's why I loved your book so much, because I was like, oh my God, traditional investment lens meets Bitcoin and it works. Great. You know what I mean? I needed that clarification.
Yeah, it fit surprisingly well into, as you say, the classic metrics that investors use, that wealth managers use, because you can say, I believe in a diversified portfolio. Like that works in the long run, or let's say it has worked in the long run historically. The future, what do they say? Past performance is not necessarily indicative of future, but it has worked in the past in terms of risk and return. And if you included Bitcoin in a portfolio up to that point, it just was very beneficial to the overall characteristics of the portfolio, whether it was risk, whether it was return. And by the way, we could talk about risk as volatility or risk as permanent loss of capital. But suffice to say that portfolios with Bitcoin did better up to the point of publication. And it turns out they have done better since then in the 5.5 years that have elapsed.